So some of the root causes of financial exclusion, the biggest one, quite frankly, is actually oftentimes just lack of wealth. If someone doesn't have enough money and is living paycheck to paycheck, they probably don't have a bank account because they don't need it. So that's a big one. Other components are, access to banks or the actual existence of financial institutions where they live. So if you don't have strong financial institutions, it's very difficult to even be financially included in a system. Another one is kind of just education, understanding of how kind of different financial tools work. That's another big hurdle. And so when we think of a CBDC, the difference here is you have two different types of CBDCs. You have a wholesale and a retail. So it's important to distinguish that because this has probably come up recently. If anyone were to go read any recent developments on CBDCs, this is actually being actively talked about. A wholesale CBDC is one which is built by a central bank, as is any CBDC, but it's primarily being used by financial institutions. And so that would be, interbank payments between one bank and another, or the issuance of money itself from a central bank over to kind of private financial institutions, such as, the JP Morgans, HSBCs, Goldman Sachs's of the world. That's a wholesale. Retail is different. Retail is a CBDC that is actually then used by kind of citizens or people. And so the way for that is you need some type of digital wallet as an individual, and then you now have a CBDC that you can go and use for payments. You can, deposit that into your bank account. Your bank account, when you withdraw money, you can send it to your CBDC digital wallet. So when we think of financial inclusion, it comes down to that retail CBDC. It comes down to the CBDC that's being used by everyday people. For that, the mechanisms around financial inclusion for those pieces are you now able to give people essentially access to a bank account in which they couldn't before because they may not have access to a bank account where they live. So have you been able to give them that? Have you bypassed certain intermediaries that other financial institutions that may actually not even allow people to have an account, for overdraft reasons, or you need to have a minimum balance. A lot of banks have minimum balance requirements, which if you don't have that minimum balance, you're going to get charged a penalty. But a CBDC, if it's an account with the central bank, which is what this would be, it would be a little different. So you're basically giving everyone a bank account is what it comes down to. And then the other one is, do you now have a digital mechanism for payments? And is that actually easier to send money between people? So can someone who's not even located right in your neighborhood, can someone else send you money, or can you still be able to facilitate business or personal transactions? To have this actually work for financial inclusion, though, it has to, I think, in my mind, have a mobile component to it. If not, you've not really solved that last mile issue. You're not reaching probably the people who need it the most. The other one is, can it operate in low bandwidth areas? If you have a system, I don't know if I use Venmo or Cash App or anything like that. If you're in a place that you don't have internet, it doesn't work, whereas Cash works. And so you actually need something that's able to operate in low bandwidth or have some type of design in which it still can. The other one is around, I think, from a financial inclusion standpoint, the other component is, can that actually fit into your overall financial history? So if you're primarily paying in cash, you're not building any form of financial history, which means that you're not able to get access to other forms of capital. You can't access a microloan. You can't access a traditional loan. You can't access a lot of other financial products. But in this case, the CBDC, can that fit into a data architecture so that you can then access a broader array of financial tools? That becomes really important. And so those are some of the ways that if we think of financial inclusion, there's ways to design for that. The question, of course, is, does the CBDC solve what I think is probably the biggest problem, which is this general lack of wealth? It doesn't, because that requires more general government policy change to think about what are the underpinnings of the economy. How is capital flowing? A CBDC itself doesn't solve that. It only solves kind of some of the conditions of what I think of when it comes to lack of wealth, which is one of the core causes of financial exclusion.
Thanks for watching this clip from Emerging Voices. If you enjoyed our content, please take a moment to like this video and share it with your friends. And to stay up to date with what's happening in Web3 from emerging markets, we produce a 5-minute, once-a-week newsletter recapping the week's Web3 news from Africa, Asia, Latin America, and Eastern Europe to help you stay informed and stay smart. Link to get access is in the description. And before you go, please subscribe to our channel. Thanks again, and see you soon.